Today's video, we will be talking about Eco Shop Marketing Berhad's IPO, upcoming IPO. Okay, so here, take a pause and look at the important details, especially the closing of the retail offering, which is your chance to grab the IPO, 5 p.m., 7 May. So by the time you see this, you have about a day to hop onto this IPO. How to hop on the IPO, we'll show you later. Now, in terms of the headline figures, share price will be $1.21 per share. Market cap will be almost 7 billion ringgit, and with a PATAMI, which is profit after tax and after a minority interest for 2024 of 177.3 million, you get a trailing earnings of around 39 times.
Yeah, which
that
is,
looks quite
on
the high side, right?
Yeah.
But let's see why they have that higher premium. But
Yeah.
before that, if you want to hop onto the IPO, do consider using our Mumu link. So Jonathan, guide them on how to do it.
Yeah. So number one, if you guys are non-Mumu user, you can go to our referral link at the description or comments below. And inside there, if you actually deploy this amount of money over here, you can get many different cash rewards. And on top of these rewards, if you key in our code FIRE24 in the exclusive deposit, you just search out exclusive deposit, then there's a code for you to key in. You can get an additional 40 ringgit on top of it. So yeah, if you want to enjoy all of these new user signups, rewards, make sure to do that. And you also can register for Eco Shop's IPO using their applications or website. So you can see it over here.
Let's look at the business. So we have been talking about this in our research team for quite a while already, actually, right?
A few months ago.
And we liken it to Costco in the US.
Yeah.
So yeah.
So it's a very simple business model only in the urban side of Malaysia, Selangor, especially like where I live, right? I don't see any eco shop.
Same.
Yeah, you have to go to like some suburban area or rural area, then only you see like a big eco shops. Yeah, and interestingly, they are selling at a fixed price model. So right now, in the item, you can even see that here's the website. This is before the price increase, by the way. So most of these items you see over here is like 2 ringgit and 40 cents fixed. So it's like a B40's heaven or N40's heaven.
Yeah.
Essentially, so yeah, if you go there, you can get a fixed price. But then this is just one of their pricing model. There's also another type of pricing model. But anyway, just to sum up, their business is basically they are in the retailing, non-grocery segment, is how they say it. So yeah, and this is the number of stores that they have in Malaysia. A lot of it is in the West Malaysia Peninsula, and in total they have about 358 stores. So if you notice that there's two types of store, one is Eco Shop, one is Eco Plus. So Eco Shop, it's more towards the fixed pricing, the 2 ringgit and 60 cents, which is right now they're charging. And then Eco Plus is more of like a different tier pricing model. So they are experimenting with 6 ringgit, 5 ringgit fixed price, 10 ringgit fixed price, those kind of like pricing models. So yeah, it's still quite small. They are just like trying to nibble to see whether is there like a market for this concept. So yeah, you can see that there's these two different type of model, and then you can see what is the store size range, how many SKUs do they like have inside each of these stores, what is the pricing model, and then you can see also what is their positioning or what is their target market for.
So when they say fixed price, do you mean that when they go into the shop, everything is
240
that price?
Yeah, 240 fixed price. Yeah. Okay, so yeah, you can see that over the years they have increased the price a lot. Previously it was just 2 ringgit. Yeah, they even named their shop like a RM2 shop. Yeah, so
Can't
that's
do anymore.
Yeah, correct. So it's like 2003 to 20, I'll say before October of 2018, it was 2 ringgit. Then after that, they increased the price a little bit. And then after that, you notice something very interesting. In just a span of 7 years, they increased their price by, I'll say 30%. Yeah, it's a huge increase. Why? We're going to be talking about that, and we're going to be sharing our thoughts about it later in the video. So stay tuned for that. And here are some of the operating metrics. Actually, if you compare their metrics with companies like 99 Speedmart, it's actually almost similar.
Okay.
Almost about the range over there. Average value of transaction is around like 25 ringgit. That's how much they shop. And then other metrics like ADSS is also pretty good. And all of the stats that you can see over here. And also one more important information over here, which is their SSSG. So this one, if you want to calculate what is their saturation point, it's when, let's say, the SSSG become negative. Usually that's the case where you may want to take more careful or notice
so
about this company.
SSSG stands for same store
sales growth. Yep,
so we're measuring
exactly the same
stores.
stores. Yeah, correct. And then you also want to see whether are they positive. So if they're positive, means it is still fine. But it start to become negative after they expanded, right? Then
however, we can see the trend that, you know, 2023 is 22%, and then it gets half in 2024, and then for FB 30 November is it's about 3%.
Yeah. So obviously, because they are trying to get more for these new stores, right? So it's going to take time to see the SSSG to be more positive. Okay, so this one is the revenue by geography. It's pretty much even out for all of these peninsula states: Central, East Coast, Northern, and Southern. Southern is all like pretty much the same, except for East Malaysia is still quite small. Then they have also another business segment where they sell on a third-party e-commerce retail platform. So this one is something like your Shopee or Lazada. They are inside there. Then there's also other type of like tiny business that they didn't really do already, which is their bakery. They stopped doing that. And then here also, because of this accounting treatment, they also have to add these loyalty points in part of their revenue. But this one is just a prospectus. I don't think you see this information in the annual report. Okay, so store format. The one that is contributing the most revenue, obviously, is their shop lot and standalone. So they also have another thing, which is the retail mall base. So this one is, I think they are renting in a third-party retail mall, big malls, and then that's where they set up and sell their stuff. Obviously, I think this one is more expensive because you are paying rental to the mall, right? Shop lot is more profitable for them. Okay, unit economics. Numbers of store is increasing, but obviously one of the concerning sign is their revenue per store versus growth is actually dropping.
This reminds me a lot of 7-Eleven.
Yes, correct.
But what is different is that with 7-Eleven, they started mainly in high footfall areas and then expand out. That's why the revenue per store goes down. However, this one, they are going in. Are they trying to go into the...
so not a lot on urban. Right now, they're just mainly focusing on rural and suburban at the time being. So that's the reason why maybe in the future they'll start to go more on urban, but not so yet. Because also you need to consider the buyers, the target market also. It's like, will that purchaser be more concerned on the quality? Because some people, they will perceive that low price or discounted price is low quality. So there's some sort of this kind of aspect. Okay, so by products category, you can see that it's also pretty much even out. But the most that they sold is the general merchandise. It's all of your items, your kitchen hardware and all those kind of things. Food, non-food, softline, and others. So you can see that the one that is commanding the highest profit margin is actually the softline over here. If you want to know what is the category inside, you can read inside the prospectus. The second one is their general merchandise, and you notice food is the one that is the lowest gross margin, obviously because this is a perishable goods. So they have to like sell it fast. If they don't sell it fast, then it's gonna go written off. So they also have another interesting other income, which is this others over here, which contributes about 52.6% of their other income segment. So this one is actually something like their children playing machines, where they actually get some portion profits from third party. So this is something that I find that is pretty interesting. They are basically using their space, they're renting out to other people. Then they can set up, I don't know whether they will do like some sort of like a slot machine or something like that in the future. But it's quite interesting to see that they are the one that is generating the footfall for other people. So people are using their space, then they also get the profit about it. So capex, you can see right now the capex per outlet, excluding inventory, is about 800,000. It's quite a lot of money. And the interesting thing is that the payback period for each of these new stores is about 1.5 years that are opening for more than 3 months. So this is also another interesting stats for you guys to know. Okay, cash conversion cycle. This company obviously is a very low CCC. They only need like 34 days to collect their entire cash from inventory. So it has been like around that point. It's also similar to 99 Speed Mart also, if I can recall correctly. Okay, so now we're going to be comparing with Costco and also EcoShop. So I was trying to like think on what is the similarities and differences. So here is something that I can figure out from reading their prospectus. So number one, they did a treasure hunt model. So you guys didn't know, Costco, there were times where they'll purposely like put different kind of like products depending on the seasonality and also the demand for the particular product. They'll put it like in front of the store. So once you see it, right, you like see, oh, I have to get this. It's something like an impulse purchase, even though you didn't even know that you want to buy that thing.
Yeah, that's how you like influence people to buy.
Yeah, correct. So they basically understand the human psychology and also what is their buying pattern.
And then sometimes they also put like they know what you want, so they actually, but they also want to sell other things.
Yes.
So they put it like way at the
behind,
end.
yeah.
So as you walk through it, then you get bombarded by all these other products they want to sell.
Yeah.
They're like, oh, maybe I need this, maybe this. So by the time you reach what you want, you already bought other stuff.
Yes, correct. So that's how they actually like trick your mind in a way, which is similar across most of these low cost kind of like stores. Number two similarity is they eliminate middlemen. They get their products from China. That's the main foreign place that they source their raw materials. So they straight away just buy their products there and then they bring it over here and they distribute themselves the products. So they eliminate all of the middlemen, which is your distributors or maybe your retailers, the party retailers, all those kind of things. And also they focus more on rural and suburban area, which is also what Costco did in the past. But the differences is over here. So we spoke to our research team also on the employee compensation. If you compare with hourly rate or hourly wages, right? Costco, they are paying their staff about like 15 USD per hour.
That is close to the minimum wage.
Yeah, correct. So, but here it's like around like 7-8 ringgit
per hour.
Yeah, ringgit per hour.
Nice.
So there's also I haven't really talked about the non-monetary benefit. So Costco, they offer like those kind of like health insurance plans, some of the leaves, even like unpaid leaves also, they also pay you if let's say you took a break or something like that. So it's all of these kind of like small little things that created some sort of like good working culture inside Costco.
Yeah.
But I don't know whether this is replicated inside EcoShop or not. So far, I think the low level one, the cashier, they are being compensated just minimum wage or maybe above a little bit. I don't know what is their benefit. Maybe you guys can share if you guys are working over there in the comments. The third one is working on cost and price. So why I say that this is a difference, even though we know that the management actually does discuss a lot about working on cost, is if you notice the price increase over the years over here, you see that they are not really controlling price. So this means that it's either them or it's someone else that is asking them for a price increase for their products. So we're going to be talking about who is the shareholder behind it, and also this shareholder actually exited out of this company already. So yeah, we're going to be talking about that in their teams. But essentially, it just tells you something about the differences. Like Costco, even though they are a low cost or low price guaranteed product, kind of like retailers, right? They wouldn't really necessarily increase price. So there's this famous saying by Jim Sinegal.
Yeah,
right.
If
He
you
said,
raise the hot dog,
by 150, right? If you increase like 150, we want to stay at 150. But you increase at 160, I'll kill you. So you say that, work backwards, figure out what is the cost, how do you like reduce it. So this is like totally different mindset from Costco and also EcoShop. But our research team also got say like the management inside EcoShop, actually they are also more cost conscious. They're always discussing about that. So maybe there's someone behind that is actually influencing their decision. Okay, so next is the industry. They are in the dollar store. Non-grocery based retailers. This is where they are at. And you can see this is the TAM. So they actually compare us with the developed nations, Japan, Canada, and USA. You can see that there's a big TAM. It's like more than 2x essentially, based on the number of stores per million of people. You can pause and then you can just like watch these stats. And if you want to know what is their market share in Malaysia right now, it's about 67.8%. Their second competitor's market share is only 12.1%. So this tells you how big Costco is, how big EcoShop is in Malaysia. And you can see that the growth that they have as compared to their competitors is also like very, very fast. You can see that they are growing, the CAGR of growing is like 16%. The other one that is compared to them is actually Setia, but this one is like a very, very small store only. It's like 14. This one is like 200. So yeah, they are basically way ahead of their competition in the dollar store industry. Okay, so this is some of the information that I collected from our research team also, SSM, and also based on their website prices. You can see that EcoShop is not really the cheapest. The cheapest one is actually Empty Shop. And you look at their margins also, it's like very, very low, 0.4%.
basically.
EcoShop is like 5.2%. So now, if you notice that Daiso, right, 5 ringgit 90 cent, but if you see their net margin is 27%. Now, why is their margin so high? Is because this SSM data is actually coming from their Malaysia Sdn Berhad. It's not Malaysia Group Sdn Berhad. So there's actually 2 different SSMs.
Wow.
Yeah. And Daiso Malaysia Sdn Berhad, they are there for quite some time, so that's why they can disclose. But for the group level one, I think it's incorporated in less than a year. So that's why we don't have that information.
So there's a big asterisk for Daiso. You have to wait maybe a year or two.
Yes, correct. To see
get
whether the
main
number.
Group, yeah.
Correct. But I would guess the number probably is about the same.
It won't run too far.
Yeah, correct. Okay, so this one is also another thing that you can see how are they performing against their peers. So in this case, they are comparing themselves with Mr. DIY. So you can see that Mr. DIY's gross profit margin is 45.4% versus theirs is about 26.4%. That's why also I think Mr. DIY didn't really perform so well lately also. SSSG also has not been doing so good. Their overseas business also is not so. But just because of competition, there's more like dollar store companies are actually coming to the market. Okay, so team, 2 important person. Number one is Datuk Sri Lee Kawat. He's 52 years old, very, very young only. And he founded this company in 2003. Now, his backstory is actually very similar to other backstories who are very successful business entrepreneur, like Mr. Lee.
Yeah, very young. Probably didn't finish education.
Yeah, so it's like Mr. Lee, the 99 Speedmart CEO. He also started very young. At 15, he already worked part-time. So he's like studying and also he's working part-time at a construction and renovation. Then he started his own business 6 years later, doing similar line. Then after that, he's also very gung-ho. He tried retail businesses with other partners at 29 or so. So he's basically an entrepreneur as soon as he's born already. So the second one is Jessica Ng Kim Teng. She is the CEO and 52 years old. So she worked in the merchandising executive at 22.
So she's more corporate.
Yes, correct. More corporate. Yeah, you can say that way. Yeah, and basically all of their work background is basically related to retail. Yeah, and you can see also that she worked in like Watson and also Guardian, basically pharmaceutical like industries back then before she joined EcoShop. Okay, now the big shareholder that is actually exiting right now, it is Credo. So yeah, the price increase that you see for their product, I would like to guess is actually also coming from Credo.
Right.
Yeah, I mean, it's a given, right? They invested in this company since 2019. And usually PE firms, they want to exit like 4 to 5 years after they invested in the companies. But in this case, they waited for 6 years. And before that 6 years, you also notice that they are trying to increase prices a lot. And there's one stats that shows that they paid a lot of dividends in 2024. And I think that's also related to maybe to Credo. And you can see last time they own about 538 million shares, and that number dropped by 80% to 107. So they are basically exiting. And you can see the remuneration is also very small, 1.3% of profit before tax. Okay, so numbers. IPO numbers tend to be good, so that's why you can see that everything is growing, fantastic. And the reason why they can grow is also because they increase their prices from 2 ringgit and 40 cents to like 260 cents. So that's why it's looking so good at the moment. They are in a net debt position. They are renting a lot of their outlets. That's why you can see also they took a lot of debt, long-term debt to finance that. Cash flow quite decent also, although it's a little bit choppy. And you can see over here the dividends is one of 150 million ringgit. This is about, if I can recall correctly, it's like 70% of payout ratio from profit for that particular year. So yeah, it's a big exit.
But it's likely to reduce.
Potentially, yeah. So they have
unless they decide to pay out.
Yeah, so they have a policy about 40 to 60%.
Okay.
That is their range. So returns on capital also is very decent.
Fantastic.
Yeah, it's double digit, 90% ROIC, 17.44% ROIC for equity and debt. Okay, so growth and risk, very simple growth. They are quite optimistic actually. They want to actually expand 70 new stores per year over 5 years.
Per year?
Yeah, so you can do the math, it's like 350 stores. And right now they have like 358 stores, so it's like almost double already. And then number 2, they are going to be increasing their distribution center. With more stores, they need more space to store their materials. Number 3 is the children playing machine, sorry. I mean, just now we talked about the other incomes side of things, right? It's quite a huge amount of money that they can collect. So with more space, they can potentially like grow these kind of like small little side business. Now, last but not least is Vietnam. Right now, they are focusing more on expanding in Malaysia, but they do have some sort of like a position in Vietnam. Although it's still small, it's quite insignificant at the moment. But if let's say they found out there's some sort of like a saturation point in Malaysia, I think their exposure in Vietnam can help, especially very early on, so that they can like know more about the retail behavior in Vietnam, and maybe they can even expand there if they want to. Okay, so race, just now we talked about saturation point already. You can see the revenue per store growth is dropping. So I think this one we need to see their upcoming quarterlies and also annual report to know whether this number is going to be in a positive or negative. Number two is labor costs and rental expenses. This one will be key, especially when minimum wages are increasing at the moment. So if it continues to increase, their expenses will increase also.
3 ringgit. Right?
Yeah, potentially. But now with Credo, actually, it's not having such a big stick. Maybe they won't really increase price. Then another one is rental expenses. There was one outlet they decided to not continue renting because the rental actually increases a lot. So that actually like affected their margins. So that's why they didn't do that.
Price sensitivity.
Yeah, price sensitivity. So this one is more on the consumer side of things. I think if you're so used to buying an item for 2 ringgit, suddenly increase to 260, you complain. So definitely there will be some sort of like complaints if let's say they continue to increase price. Then the last one is valuation, trading at 39 times. It's quite a premium. I think their future earnings, roughly we can estimate maybe it's around like 35 times for their 2025 earnings. Still quite premium. If you It's actually like on par with Mr. DIY when they first list also 99 Speed Mart. So there is actually not really much of a meat for us minority shareholders to actually like ride on the upside. Okay, so these are the final thoughts that we have. Number one is Costco culture. I think they have some sort of the culture, but not everything, not 100%. But there's still like room for improvement for that.
You revise
25 to 30% SKU, so it doesn't feel like it's boring. Because they
so
always
they're
change,
basically
they're changing SKUs, adding new SKUs every single year. So that's one thing that is good. Number three is product quality. Obviously, with low cost, the quality perception maybe will be not so good. So this one is something that they have to work on to ensure the quality for product is at a high level. Dividend policy, 40 to 60%. Our rough estimate for dividend yield is going to be about less than 5%, especially post IPO, assuming like let's say the EcoShop share price actually go up, right? So the dividend yield would definitely be lesser. Okay, this one is more of a personal kind of like thought. I'm very curious what is the founder's relationship with Mr. Pang Kweh Kim, or is this a she? This I'm not too sure, because he has been with him since before EcoShop, like doing like those kind of side retail businesses.
Interesting.
So if EcoShop, if you guys are watching this one, maybe you guys can share with us what is the relationship.
Credor.
Yeah, last one, Credor. So their exit coincides with the price markup and also the high dividend payout ratio. I mean, obviously because they are there for 6 years, so it's time for them to exit at the big valuation, which is what they are trying to achieve right now. So if you guys are still interested with EcoShop and you want to sign up for it, make sure to do it inside Mumu using our
5
referral
p.m.
link.
tomorrow.
Yes. And also, this is the quick step-by-step. You can just pause the video and watch on how do you do it. Okay, and also to remind you guys that we have a big webinar coming soon on the 12th of May at 8:30 p.m. on how to win in Trump's 2025 market chaos. Inside there, we're going to be sharing you guys our winning strategies. What do we think about the market outlook for Trump for the rest of 2025, and what sectors to avoid, and what are we going to do to actually position ourselves.
And there are only 300 seats. How many has been filled?
Right now, I think it's about 100 already.
Okay.
Yeah, assuming like they all attend at the same time. So make sure to register yourself to attend on the 12th of May.
And of course, this is our updated Fire Pro returns. And you can see all the different portfolios that we have. What is Fire Pro? It's a program. It's a community, actually, to help you speed up your research process and improve your research quality as well. How do we do that? Mainly through monthly write-ups, which are written by industry insiders, a community to help you understand the stocks that you're buying better, to give you a sense of what tips and tricks you can use to improve your portfolio returns. And of course, we have these portfolios here as a reference for you to jumpstart your portfolio or to improve what you already have. If you want to get a taste of what it looks like, what the write-ups look like, head over to our free sample section, which you can find the links and comments description. So one example, one company that we've followed but exited personally already is Delium. As you can see, the returns are not too bad. And with that, we'll see you in the next video. Bye-bye.